The markets are crying out for the big bazooka to put an end to the Eurozone woes, and many hope the EFSF is the answer. To give his view on the matter, I'm joined by Sebasitian Dullien, who is a former journalist at the German language version of the Financial Times. Sebasitian, if the leaders in Brussels do opt for the so-called insurance scheme, how will it actually work in practical terms?
There have been different things discussed. As I understand it, they want to create a new security which they would hand out to people who are buying a bond from one of the crisis countries. And this new security would be allowed to be traded separately. And well, if there is a default of one of the countries and the security would be linked to that specific country, then the EFSF would make a payout of, I don't know, 20% of the underlying bond, or maybe 25 or 15. I think that they haven't agreed, as far as I know, on the specific share yet.
So if that's the theory, do you think it will actually work? Is this a solution that everyone is looking for?
I have my doubts because, people invest in government bonds because they are perceived to be safe, at least in OECD government bonds. And there's been this paradigm shift over the past weeks or months that now even bonds for a country like Italy or France is not perceived as being exactly safe anymore. So the government bonds have moved into a completely different asset class. Now you give a certain insurance of a certain share of potential loss, but that still doesn't make this asset safe again. Usually, if you look into history and look also what's happening in Greece, if there's a government default, the haircut will be much bigger than 20%, because 20% is within the margin of uncertainty. You probably don't even know whether the country is solvent or not, if it's about plus minus 20% of GDP in debt to GDP ratio. But the point here is, well, that means if there's a government default, you will have a much bigger haircut, and this is not insured. It still remains an unsafe asset, but if there is a catastrophe, you get part of your money back. But I don't think this will be enough to convince investors to buy again Italian or Spanish or Portuguese bonds.
Does it matter how big the facility is? If it is increased to 2 trillion euros, will it significantly increase its capabilities?
Well, I mean, of course, if you insure a large enough share, well, if you would say, well, if there's a government default, we pay, let's say, 70% of your losses, then of course this might move the underlying bond back to being a safe asset. But then you won't be able to leverage much, because if you have to pay 70%, well, that means with 100 billion, you might maybe finance 130 billion in bonds. The underlying problem is that they will not increase the volume of the EFSF or the ESM, but they want to use the money in a way to leverage it. And the insurance solution, well, either it won't work or the leverage will not be much. So that's the catch-22 here, and I don't see how they are going to get around that without increasing the volume.
So we've discussed the problems, but do you have any ideas about how to make it work? What should the Eurozone leaders be aiming for?
Well, I think the main point here is if you go back to the definition of leverage, if you apply leverage to something, you usually can, in physics, you can move something which is much heavier, but you have to go a longer way. So the total force remains the same, and it's a little bit like that in money terms. Even if you leverage the EFSF, you won't get more money in that. So what's missing here is a bigger volume. So they would have to go back to the parliaments and ask for more money to do this. This creates the problem that maybe France's AAA rating is jeopardized. So then you would have to ask the ECB. But the Germans at the moment, they definitely don't want to do that. So I think you cannot solve this with financial engineering, but you actually have to put more money on the table, either from national budgets or from the central bank.
Sebasitian Dullien there, joining me from Germany, and he clearly has his doubts about the power of the European Financial Stability Facility. We'll keep on top of this story at Dukascopy TV as we, like everyone else, wait to see what Merkel and co do. Goodbye.